What are debits and credits, and why are they important for recording financial transactions? The simple answer to that question is that a debit is the left side of a T account, while a credit is the right side of a T account. Although that answer is simple enough, now we need to understand what is a T account. In order to understand that, let's take a look at a typical balance sheet. Your typical balance sheet contains three items: assets, stuff that you have that have value; liabilities, things that you owe, which requires you to give up value in order to eliminate the liability; and equity, what you're worth or what a company is worth. So some examples of assets would include cash, equipment, property, all things which contain value. This is just a small sample. Some examples of liabilities are like loan payable, which require you to give up some cash in order to pay back, or taxes payable. Within equity, you can have capital stock, which is where you record your investment in a company, or retained earnings, where past earnings are recorded. We'll get into deeper detail on these two items in later classes. Now, each of these accounts is represented by a T. So for example, cash has its own T account, equipment has a T account, property, and so too for every other one of our accounts. Now, let's take a look at some of the rules we need to remember before we actually record any transactions. First of all, equity equals your assets minus your liabilities. If you think about this a little deeper, this is quite intuitive. If you take everything that you have that has value, which is your assets, take away everything that you owe, which is your liability, what's left over is what your company is worth, or the equity. Now, using some algebra, you can rearrange this to find that your assets equals your equity plus liability, or that your liability equals your assets minus your equity. The second rule is that all debits must equal all credits. As we saw earlier, each account has a T, which has a left side, which is the debits, and the right side, which is the credits. If you take all the debits from all of your accounts and all the credits from all of your accounts, they must be equal. The third rule is that assets must go up with debits. That is how assets rise, is by giving them a debit. Let's take a look at our first example. Let's take a case where a company takes on a loan. So you get a loan from your mom for $10,000. Let's take a look at which accounts are involved. So in this transaction, the company is accepting $10,000 money, which is an asset, and at the same time, you now owe your mother some money, which is a liability. So we have cash, which is an asset, and loan from mom, which is a liability. These are two accounts. And like all accounts, they have T's. Now, we remember our rule that assets go up with debits. And in this transaction, your cash asset is rising. So we have to give a debit. We put our $10,000 on the debit side of your cash asset. But we also remember a rule that all debits must equal all credits. And right now, our debits equal $10,000 and our credits equal 0. So we have to take that $10,000 and put it on the credit side of the loan from mom on that liability. So from here, we can kind of figure out another rule, a fourth rule, that liabilities go up with credits. Let's take a look at another example. You invest in your company. So because you're broke, you only invest $10 in your company. Money's money. Let's not forget about it. So which accounts are involved? The first and obvious account which is involved is cash, because the company is getting cash, which is an asset. And the other side is capital stock. By investing in your company, you are now gaining equity in your company. So like all accounts, again, they are both represented with T's. We remember rule number 3, that assets go up with debits. So our $10 is going to be put on the debit side of the cash because our cash went up. But we remember rule number 2, that all debits must equal all credits. And right now, all our debits equal 10 and all our credits equal to 0. So we have to put our 10 on the credit side of the capital stock account. So from here, we can kind of figure out rule number 5, that equity goes up with credits. So let's summarize what we've learned so far. That equity is your assets minus liabilities, which is just another way of saying assets equals equity plus liability, and liabilities equal assets minus equity. That all debits must equal all credits. Rule number 3, that assets go up with debits and assets go down with credits, right? If it goes up with debits, it must go down with credits. With liabilities, we have the opposite. The liabilities go up with credits, and go down with debits. And finally, rule number 5, that equity goes up with credits and equity goes down with debits. Thank you guys so much for taking the time to watch this video. If you enjoyed it, please click like and subscribe. As you'll know, this is a brand new channel, and really it would be amazing if you can help us take off by hitting that subscribe button. I hope you enjoyed, and stick around for some more great content coming soon.